Good afternoon, folks, and welcome to another episode with Richie Naso. Today, we're going to talk about how to read Treasury yields and inflation signals before they start impacting your portfolio. Richie, how's it going?
Okay, great, Sunil. Thank you so much. Thank you.
You know, this is always an interesting topic for me because I'll be honest. I understand, I think, the surface level basic concept of Treasury yields. I know what inflation is, but I'm not exactly always sure how it correlates in the equity markets and the financials and different things like that. So this is going to be a great one topic for me. But
Yeah.
before we do that, I got a question for you. Any thoughts on the market that you want to share with us before we dive in?
Man, I have a lot of thoughts on the market, none of which are good near term, I must say. There are so many. Good afternoon. Yeah, good afternoon, Tester. Tester. First of all, June is not a good month. There's a rebalancing act coming at the end toward the end of the month, and it's basically technical repositioning. And by the way, if you look at the blog that was posted today, you will see what I'm talking about right here. Okay, so in number one, June is not a good month. Number two, the market mechanics. It's going to have nothing to do with the market mechanics, nothing to do with fundamentals, but only market mechanics. Okay, so that means throw out all the economic nonsense, throw it out the window. It doesn't mean anything. That's really important for you people to understand. There are plenty of times when all this talk and this gibberish that comes out of these pundits that march in and out of CNBC and so on and so forth, forget about it. Now you can throw it all out the window. Why? Okay. The option expiration triple, which a week or so ago on the 19th actually showed us that there are, let's see, I'm reading this because I'm not a, I don't memorize this stuff, but I don't want to get it wrong. So it's a June quadruple witching, and the option interest, open option interest sits at all-time high. That's 28% of all listed options. What does this mean? It means that the problem is that all these options have to settle. And clearing a substantial amount of gamma from the market and resetting positioning. So those are all extraordinary items, which maybe you could talk to Felix about, because he's much smarter than me in this game as far as options go. I only know the end result. I'm not good at explaining why, but I can tell you exactly why. Okay, so all these have to be repositioned and settled at the end of the month. You also have the quarter end of fund rebalancing. Okay, so top 100 U.S. Pension funds are currently 110% funded. All that has to be unwound to reposition themselves. Okay, so July 1st, all this is going to go away. But as of now, between now and the end of the month, I would really, really careful. And this coincided, which we've spoken about many times, this coincided with SpaceX, with the puke of SpaceX. All right, they destroyed everybody up to 220, 227, whatever the hell it is. And now the most important thing to remember for you folks out there is they go down a lot quicker than they go up. 100%. Because the sophistication of the buyers are just not up to speed with what goes on. And so they all abandon ships, some sooner than others, but they all capitulate in a vast majority of cases near or at the same time. It's a psychological thing. They don't speak about it. They don't read it. It just is what it is. So I have a very dreary look at the market here for the next 2 weeks or so, or 10 days, or whatever the hell it is. So, that's it. As far as to keep it as simple as possible with the bonds, and I'm not a bond guy, okay? But to keep it very simple, when the yields go up, people are tempted to put their money in a safer haven where they're guaranteed 4 or 5% interest on their money without gambling. So that is a hedge and that is bad news for equities because, that takes away money that's going into equities. Or that not only takes it away, but they will liquidate equity positions to buy bonds for the safe haven because they're a little nervous. Let's face it, most of us are stressed as far as our accounts go, and people run for cover, and they should very well.
So let's kind of start, if I may, from the basics in the sense of what exactly does the Treasury yield tell us, and why should equity traders kind of pay attention to that market? Or do you feel like they shouldn't?
The higher the yield, the more tempting it is for investors to invest in bonds for a safer haven versus gambling in equities, especially if they're in the growth names, especially in the magna names. So it's very simply put. I really can't put it any other way, but that is the simplest way to explain this. When Treasury yields go up, the demand for equities go down. There's a test. Yeah, go ahead. I'm sorry.
I was going to say, Tessa, I will, while Richie's talking, I will go ahead and get you the newsletter landing page, unless you already have it, Richie, of where his newsletter comes out every single week, and I'll email that to you as well. Okay, so we kind of understood the basics of it, right? Treasury is still higher. People will want to go ahead and get a safer ROI compared to investing in the equity market and risking it on that things.
Correct. And then you add in the fact that this will usually occur in a market that's under pressure. So if a market is under pressure and the yields go up, it's more tempting to take a safer approach to the market.
When the yield starts to rise, are there specific sectors that typically see themselves taking a hit first, that get impacted first?
Well, the financial names. So you see, the financial names are basically, pretty strong today. It's just one of the strongest groups. Interestingly enough, with the IWM just making up some ground, they are definitely selling equities, okay? But they like the bank stocks here. Don't ask me why, okay? But they like the financials, and so, people would invest in the financials that have been beat up. So I would say, energy names as well. I would say a gold looks like it's gold and Bitcoin are starting to show up hand in hand as a hedge against inflation. All right, so take a look at those. Gold has always been that way before it went ballistic. Gold has always been a hedge against equities, alternative assets, if you will. And so, I would keep I would keep a close eye on that one too.
Yeah. And the growth aspects of it is definitely something that stands out to me from what you said, is because the growth stocks are the riskier ones, if you will, because they're supposed to go ahead and grow. So you have the multiple on them quite higher than what other stocks may be. And therefore, if it's cheaper or it's safer to go ahead and invest somewhere else, they may go ahead and be impacted quite a bit as well. And is that why these FOMC meetings and all these conversations matter and the market reacts so much to it? Is that where that true contention?
100%. Any word when they release the notes, they're not going to be, you have a new Fed chairman in there. So I don't know the history of that, by the way, as far as the comments go early on in the term. But, nobody knows what's going on here. There's not going to be any rate cuts. You could forget about that. Rate hikes, I'm not so sure there are going to be any rate hikes either. I think you're just going to go flying off into the sunset exactly the way it is. Tomorrow is the PCE report. Now, this is extremely important because it's the Fed's. I'm sounding like an economist here, but I'm really not. I've just been at this too long. But the Fed, the PCE, it's their preference regarding inflation. It is their preference. It's their motto. It's a Fed model that really they lean on a lot. Okay, and if it's a higher reading, it could push Treasury yields higher. This is all culminating. See, all these things are culminating at the same time. Folks, this is not an accident, okay? I know when you bet and everybody's on the same side of the trade, you lose, okay? But sometimes everybody is right. This, to me, in the clearest of terms, in my own opinion, is that this is what's going on here, unquestionably. So this PCE report that's coming out, watch out, because this could provide the capitulation that the market needs and maybe wants, by the way. So, it'll put, if it is a high reading, it's going to put more pressure on stocks. And then the pundits will be out there and they'll be running their mouth about rate hikes. I think you can discount that completely, tell you the truth. At least now.
What about value stocks? We talked about growth stocks. We talked about kind of like your blue chips as well. How do value stocks get impacted when Treasury yields rise?
Well, it's interesting because, once again, in a blog that's posted on TradeZero's website every Tuesday, I write it on Saturday. Testa, all you have to do is go to their website, and they're posted there today. Okay. What are we talking about? I'm sorry to get this.
How do value stocks get impacted with
value stocks? So once again, there's a section of that blog, if you will. I call it a market letter, not a blog, but I'm ancient,
well, I'm right here. It's out here. Let me go ahead and share. I put in a link, by the way, folks, if you want to take a look at it. But let me go ahead and share my screen in case there's something in particular you're referring to that I can pull up.
It talks about the rebalancing act. Again, this is Saturday now, folks. Okay, this is Tuesday and the market's getting killed. I warned about this on Saturday. Okay, so you should be looking at this. All right, wrong, or indifferent. I lay it out there. I don't care. And there's the interesting sector piece is stocks with 50 years of dividend hikes. Right there. So the reason I wrote that is pertinent to what we're talking about. Okay? All right? 50 companies are 50 years of raising their dividend every year. I don't have to say it any other way. I mean, that's it. So they go to bonds, they'll go to stocks like this. Value stocks, value companies that have proved over the years, 50 years, that's pretty good, that they will raise, that they have raised their dividends.
Yeah. Awesome. So let me go ahead and kind of get down to the other things that I wanted to talk about in this regard as well. How often do you kind of check, like if someone is a long-term investor, right? You have your day traders, you have your swing traders, and you have your long-term investors as well. Do Treasury yields and inflation signals and all those things, which one do they matter most to? If someone's thinking 10, 15, 20 years out when they're investing, do they really need to focus on these Treasury yields and what's happening in the intraday and,
Well, I think you always have to focus on Treasury yields because it is something that takes away from equity investors pulling a string. So equity investors, if you're a swing trader or if you're a buying whole person, you want more investors investing in the name that you're long. And if there's competition for that money to go to Treasuries and not to the growth name you're long, well, that's a concern for sure. Treasury has to do with everything. The Treasury yield has to do with everything. Okay. So that's simple.
So for inflation, let's talk about inflation a little bit. We talked about the numbers coming out tomorrow. There's always a CPI and different things to focus on as well. What reports should individuals pay attention to get a better gauge of where inflation is?
The PCE report is number one. It's not even close. The PCE report. That's usually the most volatile trading session of the days that come out. And the second is the FOMC. But in this kind of, again, the FOMC, new chairman, they're not going to they're just going to play it, middle of the line right now until he gets a firm grasp of what's going on. But this guy, by the way, is not afraid to pull the trigger on anything. He will do it, okay? But he's not going to do it early on here.
What'd you think about his first press conference and his comments and all of that?
I mean, they were construed as bearish, and market went down on that. And you got to be careful with these characters that try to read this and push the market in a certain direction, which all of a sudden the rest of the news out there follows their lead, and by the time you know it, you got an avalanche of negativity out there because of one comment, one word in the wrong direction. It's crazy, but that's what we're dealing with in this day and age.
Yeah, the markets definitely went ahead and took a bit of a hit whenever he was speaking and afterwards as well. A lot of individuals, there's supposed to be this Chinese wall, if you will, between the presidency, no matter who's in office, and the Fed chair, no matter who's holding that position as well. A lot of people expected for Kevin to kind of just go along with what President Trump may have wanted. Of course, the Fed needs to do whatever it needs to do independently, regardless of the agendas of the administration. So we'll see how that partnership kind of plays out for the remaining years that we have. Are there any other sectors or anything else happening in the markets that you wanted to kind of go over here?
Yeah, tomorrow is after the close is MU's earnings. Huge. This is huge. Now you see today semiconductors are getting walloped all over the place. Okay, so this MU again is another sign to me pointing in this direction. Okay, pointing in this downward direction for to the end of the month. Okay, which is not too far away the last time I checked. So this earnings MU is extremely important for the near term, and it's all part and parcel. Just add another notch to the potentiality going forward here.
I talked to Felix right before you, and he said even in his, this is just his opinion, and the gauge I got from it is that even if Micron knocks it out of the park, has great report, the market may still go ahead and punish it because of the great run it's been on, because of everything else that's in the markets as well.
And I'll add something else to that, okay, which has nothing to do technically, it has to do with the personality of this stock. Chairmen of companies take on the personality of a chairman. Doesn't matter who the chairman is, what he's talking about. The companies follow the lead of the chairman and take on the personality of the chairman. I am telling you in no uncertain terms, folks, that this MU stock has destroyed a lot of people over the years. Hurt them badly. Up, down, it doesn't matter. So that to me is in the back of my mind here. And Felix could be right, which is, a double-edged sword. If they come out with good earnings, look at the run it's on. It's already in the stock. Stock is down $119 today, by the way.
What are you on?
Huh?
I said, look at this run. I mean, in this year, in April, this stock was at $366. It is trading at 1086.
Yeah, and this to me with the PCE report, and this is all culminating together. It's a bad sign to me. But again, I am telling you, without being any analyst, I don't have to have the charts in front of me for the last 5, 8, 10 years. I'm telling you, this stock has destroyed a lot of people.
Yeah, it definitely has, especially if you've been kind of short this name. I remember trading Micron when I was watching Jim Cramer when I was in college back in 2011 maybe. And it definitely was a bit painful. I was in my Roth IRA, and it was not a fun run. That much I can tell you. I can't even go.
Yeah, this stock, I'm telling you, this is another bad scenario that's lining up. I'll give you another one. The Japanese have raised interest rates. The Japanese, what do we care about Japan? Well, we care a lot about Japan because there's a little thing called the carry trade. And when they raise interest rates, sometimes, maybe not this time, I don't know, I'm not privy to that kind of information, but sometimes they put up the currency to borrow to buy growth stocks. Okay, so you got to be careful here. Okay, so this raise has not done anything for the yen. They may have to do it again real soon. So that is not a good thing either. So you need to be really careful here.
Seems like a lot of things for individuals to kind of focus on outside of just what's happening within your company's stock. You have inflation, you have treasury yields, and you also have things happening overseas. A yen carry trade, of course, is where individuals would purchase and 0% interest, and then they would go ahead and flip it over to the US side and buy equities and trade or treasury yields or whatever the case may be, and kind of get that arbitrage in between. So when the Japanese go ahead and raise interest rates, it kind of messes up with things on the US side as well. That's a very simple surface level aspect of how I understand it. Please go and do your own due diligence. But
simple is good. Simple is good. My biggest asset is keeping things simple. The main reason why I'm able to be continuously make money is to keep things simple.
Yeah. Got a follow-up here from Testa. One follow-up from last week. Richie said he uses a 15-minute time frame. He also said, I believe that the higher time frames are controlled by funds and institutions. Should day traders follow what time frame the funds use? So for day traders, what do you suggest they look at when they are charting stocks? And what do you suggest to look at when entering and exiting?
The 3-minute bar charts overlaid by Keltner Channels. You folks have listened to me until I have no more saliva in my mouth talking about the 3-minute charts, the 3-minute bar charts overlaid by Keltner Channels. When you come down near a support area or up near a resistance area, it's when the algorithms and the funds move, go into action. Okay, go into action. They want to trap the buyers going to a resistance area because of fear of missing the market. So they'll spend a little money to push it through. Everybody in the technical areas will take over. The algorithms join in. Okay. And then when you come down near a support area, it's the same thing. So the 3-minute, to me, a 15-minute window is fine. 5-minute window is okay. But if you're a day trader and you're not a swing trader and you are looking to put up winning trades by scalping, if you will, there are no better set of charts than what I'm describing as far as I'm concerned.
Yeah, Tessa, the 15-minute comment may have been about how the algos reset every year. Of course, with so many different algorithms out there. The ones that Richie was referring to were the 15-minute ones that kind of reset. Well, the market does seem to be doing its best to climb back. It's got a ways to go. The SPY is still down about 1%. The Qs are down about 2.5%. So a lot of time in the day for them to make that climb if they want to. But you've got a clipboard there. You got any other notes for me?
I got a lot of notes. The SPX just went above 7,400. All right, it's important. That was a support area on the way down. So what you want to look for here is this acceleration through this 7,400 number. All right, don't get fooled by jumping early. Instead of buying 7,400.01, you're better off buying 7,403, 04. Don't get sucked in. Let it clear the technical area. Let it clear it with acceleration. Those are always the signs that you're looking for. Acceleration through technical areas. It doesn't matter if they touch technical areas. What matters is if they accelerate through technical areas up or down. Doesn't matter.
All right. Well, I always appreciate your insights on that. If they don't have any other questions, we'll see if the market continues to go ahead and rally here and at least try to get somewhat close to break even. There is a gap for obviously them to fill with this gap down that was caused in the markets as well. Richie, always a pleasure. Thank you so much. And folks, that link that I sent you, you can always go to the live blog part of it, and Richie's comments will be posted every single Monday. I know you sent it on Saturday, and then by the time TradeZero flips it back over the weekend, it'll be posted on Monday. So Richie, thank you so much for your time. I appreciate it.
Okay. Thank you very much, Sinead. Have a nice day, folks. Thank you all.
Bye-bye.
Bye-bye.